Hello everyone, welcome back to my channel. So this video marks the beginning of week number 26 of this Road to 100k Realized Return Challenge. So yeah, 26 weeks, it's basically half a year, and apparently we started this second half of this year with a very positive tone. Yesterday markets were closed on Monday, and because of the Martin Luther King's day, and also because of the inauguration of now President Donald Trump, President of the United States. And markets began this today, Tuesday, on a positive note, and to the extent that Ford Motor Company has just crossed above our cost basis, because as you can see right here, our cost base was 1022, and currently it's trading, it's still quite early in the trading day, but currently it's trading at 1028. And because of that, and since we had last week 6 call contracts which expired on 4, we had 600 shares which were not under collateral by any calls. I just decided and went ahead and sold those 600 shares, as you can see right here. So these 600 shares were sold at a price of 10.31. We paid a commission of 3.29, but nonetheless, now we have to wait. We cannot sell right now these 3,700 shares because they are still being used as a collateral for these 37 call contracts. And because we sold these contracts at 4 cents each, 4 cents a share, as you can see right here, potentially it could work out, it could be worthwhile for us to buy back these 37 contracts and simply sell the shares at this point. However, I still prefer to wait because we don't know how much of a commission we'll have to pay to close out these contracts, because these are still a lot of contracts. And then because of the size of this holding, this will also force us to pay a large commission as well. And so I prefer not to take the risk. There will be more opportunities for us to close out these contracts, and then we'll be able to simply sell these shares. I'm expecting that since we sold these contracts at 4 cents each, 4 cents a share, when these contracts, because these contracts will for sure lose value, the price is not going to reach 10.50. If it reaches, it's going to be very good for us, but for sure it's not going to happen. It's with a very likely degree of probability it's not going to happen, and so these calls will eventually lose enough value, and when they are trading at 1 or 2 cents a share, we will simply buy those back, because by then we will have a profit on the contracts, and then we will be able to sell the contracts, all the shares outright, without having to wait any longer. And especially because time is on the absence. Ford is due to release its earnings on February the 5th, so we have no time to waste. We have to get rid of this as soon as possible before this volatility event comes upon us. Now, since we sold 600 shares, I decided to use the collateral which was released, which is around is a little bit more than $6,000, as you can see right here. So $6,886. We went ahead and we sold 2 puts on Pfizer with a strike price at 25.5. The premium is low, but there's a reason why we chose this premium, and the reason is that given the average price of our current holdings is 28.5, and at the time we sold 4 puts which were assigned, so we have 400 shares. If we sell 2 puts contracts with a strike price of 25.5. As you can see, it will yield average a cost basis. If those shares were assigned, if those puts were assigned, our cost basis will go down to 27.5, and so this will allow us to get down 2 notches in our option chain here at Pfizer. And so because of that, I decided it was worth for us to go ahead and try to see if these puts are assigned or not. At the moment, the option chain is not visible for some reason. Let's see if by refreshing the page it will show up. Interactive Brokers has been acting up today, probably because of the large volume of transactions after a day with a business day with the markets closing. So as you can see right here, instead of having to sell calls at 28.5, we'll be able to sell calls at 27.5, so 2 notches down. But of course, that will depend on whether these 2 put contracts are assigned. Now, because also the QQQ, which tracks the Nasdaq, has also been going up in the past few days, this allows us to go ahead and sell 3 contracts, and we sold 3 contracts with a strike price of 536, which is our cost basis, but those were not available for this expiring today, 0 DT options, so we had to sell 3 contracts expiring tomorrow, Wednesday, and yeah, we'll have to wait and see. I'm very, very confident that this strike price will not be beaten, because it will have to go from 521.70, which is currently at the moment, to 536. So over the course of 2 days, that's too much of an ask, and so yeah, it will not going to happen. But we will have to wait and see what happens. For the time being, I'm very optimistic that finally we are seeing the light at the end of the tunnel in terms of our 4 shares. And let's just go ahead and input these trades in our scoreboard. I'm not going to do any complex calculations at this point, especially in terms of the 4 motor company shares, because I think those calculations will be more appropriate when we sell the entire holding. And for some reason this is not working. Let's see. Interactive Brokers today has been really acting up for some reason. And yeah, we just have to wait that it comes back to normal. All right, so these were the trades that we did. Let's just start by inputting the trades by alphabetical order, and again, it's not working for some reason. Right. All right. So now it is working, so let's just go back to our scoreboard. Today is 21 January of 2025, so 21/01/2025, and let's just go ahead and do this. Now this, let's see here, yeah, let's just input this sell option, these 4 shares, this sale. So let's go here, that there is no expiration date, and we'll just go here. So it's 4 motor company. We sold the shares, and we sold at a price of 10.31, as you can see there, the equivalent of 6 contracts, right? And we received no premium because this is an outright sale, and we had to pay commission of 3.29. All right, so actually this is in here. We have to pay nothing in there, and this formula will have to be adjusted, but I will do it later. and we have to pay 3.29, right? We might as well come here. Yeah, we'll have to copy this formula later, but I will do that at another time. All right, so, and then of course I will show the next on the next video. Now let's just copy this here, and let's go ahead and input here our Pfizer shares, which will expire, our Pfizer puts here, which expire on the 24th. And this is Pfizer. These are covered calls. The strike price is 25.5, 2 contracts, and we received in premiums 5 cents, and we paid a commission of 1.12. Right, so we received 5 cents and the commission of 1.12. Got it. Now, and we have to do the same, but for the QQQ. This will expire tomorrow on the 22nd. This is QQQ. This is a covered call again. Strike price 5.36, 3 contracts. And we receive, I believe, a premium 14 cents. Is that correct? Yes, this is correct. And a fee of 138 and 69. If it was 70, it would be 208. If it's 207, so it's 207, and we received 14 cents. Got it. So this is now complete, and I'm going to have to do this off screen in terms of this calculation of the 4, and then we will have to wait and see what happens until the end of the week. I'm hoping, and what I'm expecting is that by the time the next video is posted to wrap up the week number 26, we will no longer be holding these 4 shares. The entire holding will be already sold, and we'll be calculating the profits of this trade, which of course it was a long time coming, but I'm sure this will turn out all right. For the time being, this is all. Feel free to leave your comments below. Any questions, any suggestions you may have, you can also DM me on LinkedIn, and feel free to like the video and subscribe to the channel. And we will reconvene next Saturday to see how this challenge is going in terms of the wrap up of week number 26. And I'll see you there.